Hello, my name is Jim Keener. Welcome to Coach for College. Today we're going to discuss your combination to financial aid and paying for college. What is conventional college financial aid? By conventional, what I mean is what is generally done or believed by college-bound families. The amount of time and type of financial aid is based upon two factors. Student merit, which is the academic, athletic, talent, and student positioning qualities of the student relative to the freshman profile of the college. The second, student financial need. This is based upon the financial need of the family. Where does traditional financial aid come from? Here what I'm speaking to is what is long established, what exists in tradition. Typically with financial aid, 66% of the money comes from the federal government and about 19% comes from the college, and then some of the other sources are listed on the graph. Financial aid formula. What makes us different at Coach for College? We use two formulas. The first formula is the conventional formula. Cost of attendance, COA, minus expected family contribution equals financial need. The second formula we use with Coach for College is a formula for paying for college. We identify wealth transfers, money that you're transferring away unknowingly and unnecessarily. We add that to your family budget, and that equals money for college without loans, and you're able to keep your current lifestyle. What is the cost of attendance? Basically, it's tuition, room and boards, books and supplies, transportation cost plus personal items. That equals your total cost of attendance. Be careful here. Not all schools are on the up and up as far as what the actual true cost of attendance is, and we do use strategies to identify that. What is the expected family contribution? It's a formula-driven approach for estimating how much the family can pay. It's computed based upon information submitted on your FAFSA or your CSS profile, with some private schools use, and it's based upon the parents' and students' assessable income and assets. We calculate your AFC and then we project your aid by each of the colleges that you're interested in. We also strategize to lower your EFC. The main thing here to understand is some schools will give 100% of your need, some schools will give 30 to 50, some schools will give 60. It just depends. Our EFC tune-up provides customized reports, and we look at this information by school, and we look at the average percentage of the need met. We also look at percentage of gift aid, look at loans, we look at free money, and it allows you to see which schools are more affordable for your family's financial situation. If money was not an obstacle, would you choose a private school or a public school for your child? Many people have the misconception that private schools are going to be more costly. That's not always the case. We do the analysis for you. You make your choice. Knowledge makes private schools more affordable, and as I said, there's a percentage of gift aid and self-help that the colleges will meet. We analyze that, and the important thing is you have to have the correct information to make the best decision. The FAFSA, it's all about rules, the free application for federal student aid. Everyone must fill out this form to get financial aid. You cannot apply for federal loans unless you fill out this form. In some situations, annuities and cash value life insurance are exempt. You have to be careful. Some college planners will just try to throw you into these products, and Coach for College, we're totally against that. The CSS profile form, this is required by some privates, about 300 of the private schools. You need to determine if the private school, if you're applying to one, only requires the FAFSA, or if they require both the FAFSA and the CSS profile form. Again, you have assessable and non-assessable income and assets. There are different rules for each formula. Some private schools will also require an institutional form. Look for surprises when you have to do an institutional form. It's important to understand what the school is looking for. What is assessable? Parents and students. This is basically a partial list of what's assessable and non-assessable. Our EFC calculator has this built into it, and we also have thorough knowledge of what's assessable and not assessable. When you receive your financial aid award, it will indicate the amount and type of the award, grants and scholarships, student loans, and whether or not student work study is included. The good thing about student work study, it's income to the student. It does not get assessed on the FAFSA form. You have some choices to make. You can accept, deny, or appeal any portion of the award. ask for an extension of time to review the award, but you should accept the award to safeguard the financial aid offer. You are under no obligation. Appealing an award, this is basically where you ask the school for more money. They can give you more money by exercising professional judgment. You have to establish special circumstances or reasons for them to exercise the professional judgment. You need expertise and also adequate documentation. The more documentation you provide, the better. We take your success personal. Our EFC tune-up includes the financial aid appeal when appropriate. We can even help you when you're in college. My favorite example, and you'll probably see me use this several times, is when we recently helped a college sophomore and we lowered their EFC from $9,600 to about $1,400. So their objective was to get under $8,000 to qualify for a special scholarship program the student was applying to. But as you can see, we did much, much better than that. Get the combination of financial aid and paying for college, and that's what Coach for College does. We start with an EFC calculation. We strategize on ways to lower your EFC number. Then, based upon what you approve, we implement relative financial strategies. We develop a college plan and we execute it to lower your EFC number if it's possible that you will qualify for financial aid. What happens when your family income is too high and you're not going to qualify for financial aid? This is where liability asset performance comes into play. This is our second formula, paying for college. We use a borrow smart, retire smart analysis software. We also have wealth transfer software. We do a review of possible wealth transfers. This is where you have money that you transfer away unknowingly and unnecessarily. Possible outcomes. Now, listen very carefully here. We'll show you how to pay for college using your mortgage and pay off your mortgage in half the time. This is no typo. It's very possible in many situations because now you're losing a lot of interest to the financial institutions. Again, we'll reduce interest expenses, recapture cash flow going to the financial institutions. There's a way to use your 401k and get all that money back and more at retirement. No expensive loans to pay for college. Again, these are some of the strategies that we use. In the end, it's up to you what you want to do and what you feel comfortable doing. Here's a simple proposition, my personal guarantee. I can show you the strategic combination for paying for college. You will save money and much, much more money than my fee. I want to thank you for listening. Get started today paying for college using two formulas, and maybe only one formula applies to you. That's our paying for college formula. Thank you again.